Welcome to our deep dive into Indian microfinance. We're using a conference call transcript from CreditAccess Grameen Limited. They're a leading microfinance institution and just released their Q3FY25 results. You wanted to understand their business segments, the industry outlook, your future plans, and any risks they see. So let's get right to it.
It seems like the microfinance industry in India is facing some headwinds right now.
Yeah, definitely. Delinquencies or borrowers not repaying loans on time are a concern. It's kind of the elephant in the room in this transcript.
Yeah.
But I did notice that CreditAccess Grameen sounds pretty optimistic.
That's interesting because delinquencies are a big problem. Their take is that this is temporary, and they're using their own data to back it up. They're pointing to a slowdown in new delinquencies happening.
So they're saying it's a bump in the road, not a long-term trend.
Yeah. They think it was a perfect storm kind of thing. Festivities, extreme weather, and some local disruptions.
Okay, so external factors making it harder for people to repay on time. Got it.
Exactly. And they believe October and November were the peak. Things should start going back to normal soon.
So by when do they expect things to level out?
By the end of the current fiscal year, FY25, or the beginning of the next FY26. And they're really emphasizing their proactive steps, stricter rules for new loans, and more people on the ground for collections.
They're not just waiting and hoping. They're actively trying to manage this situation.
Right. And on that note, they're also seeing some good signs in their AUM, their assets under management, basically the total value of all the loans they manage.
Okay, AUM. So they're seeing growth there again.
Yeah. It was contracting for a bit, but growth restarted in December.
That's great to hear. Can you give us more specifics about what they're seeing?
Sure. Disbursement rates are recovering. That's how fast they're giving out new loans. In December, they were over 80% of normal, and in January, over 90%. Plus, new borrowers are increasing. A lot of them are new to credit customers. That means they're getting formal credit for the first time ever. It's a sign of how far microfinance is reaching.
That's a very positive indicator. We talked about business segments earlier. Did any specific segments stand out in the report?
Their retail finance division. It seems to be doing really well.
Can you remind me what that division focuses on?
It's broader than their traditional microfinance. Usually it's small loans to groups of women. The retail finance offers more products to more types of customers. It's a part of their strategy to diversify. They want to rely less on just microfinance, especially since it's facing challenges right now.
Interesting. So how is it performing?
It's growing fast. Disbursements jumped 51% quarter on quarter, and now it's 5% of their total AUM.
Wow, 51% in one quarter.
Yeah.
Sounds like diversifying is paying off, at least in the short term.
Yeah, but it's still just a small part of their overall business. The question is, can they keep this growth going long term?
Right. Sustained growth is key. We should also talk about the MFIN guardrails. Could you explain those for our listeners who might not be familiar?
Sure. So the Microfinance Institutions Network, MFIN, introduced these guardrails to improve lending and protect borrowers. It's basically a set of rules and regulations. They've really changed things, especially by reducing debt, both for the customers and the loan portfolios themselves.
Okay, so deleveraging the system, making sure people aren't taking on too much debt.
Right. One of the guardrails, Guardrail 1.0, has meant fewer borrowers have loans from lots of lenders because it sets limits on how much you can borrow total.
So trying to avoid people getting in over their heads. Sounds like a responsible move.
It is, but it's also changed the competition. The data from the call shows the number of people who have loans from CreditAccess Grameen and 3 or more other lenders is down, so it's reshaping the market.
And there's another guardrail coming, right? Guardrail 2.0. What's that going to do?
It's coming in Q1 of FY26, and it makes things even stricter, so it'll likely mean people can borrow even less.
Another potential shakeup for the industry.
Yes, exactly. It'll be really interesting to see how CreditAccess Grameen and everyone else adapts to these new rules.
They seem pretty confident. They even said they expect to keep over 80% of the borrowers in the segment most affected by the new guardrails.
That's a bold statement. We'll see if they can pull it off. But one thing's for sure, the MFIN guardrails are having a huge impact. We're still seeing how it all plays out.
Definitely something to watch.
Yeah.
Now I think we need to talk about risk.
Right. You wanted to know what risks they see going forward. We've talked about a couple already.
Yeah, the delinquency situation and the new guardrails. What other risks are on their radar? And how do they plan to handle them?
That's where their risk management approach comes in. They're trying to be proactive.
So on top of the stricter lending and the focus on collections, what else are they doing?
They're being super conservative with their provisions. That means they're setting aside more money just in case of losses, and they're speeding up their write-offs, Getting rid of bad loans faster.
They're really trying to shore up their finances.
Exactly. They're getting ready for a potentially rough ride, which might affect profits in the short term.
So it's about weathering the storm and coming out strong on the other side.
Yeah, I think that's a good way to put it. They know there are challenges, but they're doing everything they can to mitigate the risks.
Did they give any growth projections considering all this?
Yeah, for the current fiscal year FY25, they're projecting 7 to 8% AUM growth, which seems pretty reasonable. But for FY26, they're aiming for 18 to 20% worth.
Wow, that's a huge jump. Why so ambitious?
Well, they think the delinquency situation will improve, and they're betting on the retail finance division to keep growing. Plus, they're hoping the overall economy in India will pick up.
So it's a mix of their own plans and hoping external factors go their way. What stands out to you most about their approach?
I think it's their honesty. They're open about the problems, but also optimistic. It's a tricky balance.
Yeah, they're walking a tightrope. Now, one thing I keep thinking about is the human side of all this. It's easy to get caught up in numbers, but there are real people behind all this. The CreditAccess Grameen employees, the borrowers, and their families.
That's so important. How are they handling that side of things? Especially now with all the challenges.
That's a great question, and one we're going to explore in our next segment. We'll look at how they're managing employee morale, supporting their borrowers, and making a positive impact on people's lives.
I'm looking forward to that. Because at the end of the day, the human stories are at the heart of microfinance. So we were talking about the human side of things. And the transcript actually had some interesting stuff about how CreditAccess Grameen handles that.
Yeah. I was really struck by the part about employee attrition. They mentioned that something like 3,000 former employees asked to come back to the company. That's a pretty big number.
Yeah.
Especially now when everyone's trying to hire.
Yeah, that's a really good point. Makes you think they must have a good company culture. And employees feel loyal even with all the craziness in the industry.
Right. And they were talking about how they mostly hire new grads and then promote from within. That probably helps people feel like they have a career path there, which is a good way to keep people around.
Yeah. And it shows they're willing to invest in their employees, which means those employees get better at their jobs and the whole company benefits.
They also mentioned these control teams that help the field teams when things are stressful, like when they're trying to collect payments. It seems like they're trying to support their people who are dealing with the tough stuff.
Definitely. It's smart because collections can be super stressful for everyone involved, both the employees and the borrowers. So if CreditAccess Grameen can make that process easier, it's a win-win.
And remember when they talked about the top execs going out and meeting with employees and even customers who were behind on payments? I thought that was a really cool example of leadership.
Oh, yeah, that was great. It's easy to talk about caring about your people, but actually going out there and spending time with them is different.
It shows they actually want to know what's going on, not just look at numbers on a spreadsheet. Meeting with customers who are struggling with their loans, that's a big deal.
It is. It shows they want to understand what's happening in people's lives, not just treat it like some kind of financial mistake.
And it also shows the employees that the leaders have their backs, even when things get tough.
For sure. It's about working together to fix problems, not just blaming people when things go wrong.
We also talked about their new apps, Grameen Maitri for employees and MAI for customers. Do you think those fit into this whole human-centered approach?
I think they're a good example of how technology can actually help. It can empower employees and make things better for customers.
I'm not sure I follow. Can you say more about that?
Well, Grameen Maitri takes care of a lot of the busy work, onboarding new customers, managing loans, that kind of stuff. So employees have more time to build relationships and focus on good service.
So the technology takes care of the boring tasks and lets humans do what they're good at.
Exactly. And with MAI, customers have more control over their loans. They can check things, make payments, even ask for more money right from their phone.
That's huge in India, where so many people use mobile phones. It makes financial services way more accessible.
And it's available in 10 different languages. They're really trying to include everyone.
So technology is bridging the gap between the company and the people it serves.
Yeah, that's a good way to put it. It can make microfinance more human.
They also compared the current situation to demonetization and the COVID pandemic, saying those were rough times too.
Yeah, and they pointed out that both times it took about 3 quarters for the industry to recover.
They're using the past to help predict the future and manage expectations.
Right. They're basically saying, we've been through this before and we came out okay, we can do it again.
But they're not just relying on history repeating itself. They're actually doing things differently this time.
Exactly. All those things we talked about, stricter lending, more focus on collections, conservative provisions, those are all part of their plan to deal with the challenges.
And their diversification strategy with retail finance is a big part of their growth plan.
Yeah, they're trying to have multiple ways to grow. So even if one part of the business struggles, they can still be successful overall.
So they're learning from the past, taking action, and planning for different scenarios. Seems like a pretty thorough approach.
I think so. And it's a good lesson for anyone who wants to understand how microfinance companies can deal with uncertainty and come out ahead.
And remember, this is just one company. But these trends are happening across the whole microfinance industry in India.
Oh, absolutely. The delinquencies, the new rules, the role of technology, the importance of being human-centered. Everyone's dealing with this stuff.
It's a complicated situation, but it's also really exciting. There's so much potential and so many challenges. And in the middle of it all are people, both the lenders and the borrowers.
You're so right. We've been talking about money and strategy, but microfinance is about people. It's about giving people power, building up communities, creating opportunities.
Exactly. So let's shift gears again. In the last part, we'll talk about some bigger questions, like what does the future of microfinance in India look like? And how will it affect the country's economy and society?
I can't wait to dig into that. It's a huge topic with massive implications.
So we've talked a lot about CreditAccess Grameen, but what about the bigger picture?
You mean like the future of microfinance in India?
Yeah. What are the big trends? And how will it impact India's economy and society?
That's where it gets really interesting. Microfinance has been huge for financial inclusion, especially for women in rural areas. But things are changing fast. Fintech, new regulations, the economy, it's a whole new ballgame.
I was thinking about technology. Those new CreditAccess Grameen apps are cool, but could technology change things even more dramatically?
Think about AI and machine learning. They could totally revolutionize credit scoring and risk assessment. Lenders could make smarter decisions and more people could get access to credit.
That's pretty amazing. But isn't there a risk with relying too much on algorithms? Especially in India, where data privacy and all that is still a work in progress.
That's a really good point. We have to make sure these technologies are used ethically and responsibly, and protect borrowers from bias and discrimination.
And even with the best tech, I still think relationships and trust are going to be crucial in microfinance.
Oh, absolutely. Tech is a tool, but we can't forget that microfinance is about people, understanding their needs and challenges.
Right. Tech can help, but it can't replace the human connection.
And how will microfinance adapt to borrowers' changing needs? Traditionally, it's been small loans for people to start businesses, but as India grows, people might need different kinds of financial products.
Like CreditAccess Grameen's retail finance division. It's already offering more options. But what if we saw microinsurance savings accounts, investments?
Exactly. Microfinance could help people become financially secure in all sorts of ways.
And it's not just about individuals. Microfinance could help with things like sustainable development and climate change.
Definitely. Imagine microloans for solar panels or eco-friendly businesses, or supporting businesses that create jobs and boost local economies.
So microfinance could actually make a positive difference for everyone, not just borrowers, but communities and even the whole country.
I think so. It's a powerful tool, and if it's used the right way, it could help build a better future for India.
This has been a fascinating deep dive. I hope our listeners learned a lot.
Me too. It's a complex world, but is so full of potential. And like we said, it's all about the people.
Before we go, we'll leave you with a few things to think about. What role do you see microfinance playing in India's future? How can technology make it even better? And how can we make sure microfinance stays focused on empowering people and changing lives?
These are important questions. The story of microfinance is still being written, and we all have a part to play in making sure it's a story of progress and hope.
Thanks for joining us. See you next time.